Hi everyone, I'm Karunya Rao, and in Ideas for Profit today, the spotlight is on Bata India. The company posted better than expected March quarter results with revenues close to pre-COVID levels, driven by significant ease of restrictions and opening up of offices post-dip in COVID-19 cases. This is what happened in Q4, might I add. Meanwhile, gross profit margins dipped 570 basis points on account of adverse product mix and high raw material prices. However, savings on rental as well as cost control measures led to a margin decline of a lower rate of 350 basis points year on year. Second wave of COVID-19, along with the related lockdowns, restrictions, those are likely to impact demand in the near term. But with increased pace of vaccination, we expect opening up of economic activities and significant increase in mobility from H2 of FY21. And this would result in a very strong comeback for footwear demand. Strengthening presence in rural areas remains a key focus area for Bata. It continued to add retail network in Tier 3 to Tier 5 towns, mainly through the franchisee route. During Q4, Bata opened 10 new franchisee stores as well as appointed new distributors to serve its multi-brand outlets. Owing to COVID-19, ongoing lockdowns and restrictions in various states, and consumers' apprehension of visiting stores, Bata has strengthened its e-commerce presence by widening its product portfolio on its own websites as well as third-party sites also. Bata has even scaled up tech-related solutions and investments to offer better customer experience and drive up cross-channel purchases for the omni-channel customer. Bata continued new product launches to drive consumer interest. It launched relaxed workwear collection across its brands, whether it's Bata, Hush Puppies, Bata Red Label, and Comfort or Naturalizer brands. On the fashion side, Bata has tied up with designer duo Gauri and Nainika to launch exclusive collection under Marie Claire brand at the upcoming Lakme Fashion Week 2021. On the expenses front, Bata stated that cost control measures would be the key focus area for the company. It is also negotiating with landlords for store rentals. The company is also controlling all kinds of discretionary spends. Apart from that, Bata is looking to eliminate wastages and introduce efficiencies in the value chain in order to control costs. The second wave of COVID-19 led to lockdowns, restrictions from April 21 onward, which would impact the demand over the near term. With reduction in COVID-19 cases, several states have started the unlocking process, and we expect more states to ease restrictions going ahead. Resumption of offices would lead to demand momentum coming back strongly for Bata, whose product portfolio is skewed towards the formal segment. Private offices are taking the lead. They're also encouraging employees to get vaccinated. And as economic activity normalizes and mobility increases, we expect footwear demand to come back quite strongly. Another important point is the scope of market share gains from the unorganized players who form about half of the industry. With COVID-19 second wave in the span of 6 months, unorganized players have been hit hard. Unorganized players would have probably faced liquidity issues, and we expect a shift towards the organized segment to accelerate. With the elevation of Sandeep Kataria, Bata India's managing director, to parent Bata's board in the latter part of FY21, we expect opening up of export opportunities, which would be a big trigger in the long run for Bata India. Given that Bata India has a low-cost labor advantage, it has immense opportunity to supply to overseas sister concerns, as parent Bata has presence in about 70 other countries. Bata has strong cash reserves. Cash and cash equivalents are worth about 1100 crores, which would enable the company to tide over any near-term weakness and emerge stronger once the pandemic subsides. If you look at the stock, it's trading at 46x of FY23 projected earnings. It's down 13% from the pre-COVID levels, which we saw in February 2020, and we believe investors should add the stock to their portfolio.